Good afternoon, or good morning, or good evening, wherever you are. Good to see you all. Everything good? Room's good? Screen is good? You got a slide up? You don't have to be a genius. You can hear me fine. Let's get going because, as usual, I have probably packed a little bit too much into this, and I always do like to finish up by 6 so you all can get on with your evenings. If you looked at that last email, you probably don't read those, but it said in there, hey, this is really going to be a good one. And if you're new, no, I don't always say that. As a matter of fact, last one I said this is going to be boring. Of course, boring and good are not the same thing. I wouldn't take an hour of my time and the time it takes to prepare this if I thought it was going to be no good. Obviously, I think it's worth my while to talk to you, to show you some things. But I know some of these are in the category that some people would consider boring sometimes, like the last one a couple weeks ago probably was. It's not that it's not important. As a matter of fact, some of the boring ones are probably the real secret to your success, but it's not the glittery, shiny thing that a lot of people like to go for. Today is a little more of the glittery, shiny thing, but hidden in there are going to be lots of neat little things. I really came to like this one as I was doing it. I was a little fuzzy on how to go about it because I know it's an important topic, and those of you who have, taken seminars with me or trained with me, you'll probably really relate to this well. Some of you, you may be a little far-fetched, but I always feel if I can reach 5 or 10 new people and get something across to you, I think it's worth it. And for a lot of people, I know some of these concepts kind of sit with you a while, and then they maybe come back to you later. So let's get going for tonight. Here is the title slide, and you already saw that. I sent it out afterwards. I kind of thought, I hope nobody's offended by that. And I don't think anybody should be, because here's what I mean by that. Here's a couple of facts. I know trading is difficult to the average person, to most people, but it just doesn't need to be that much so. For those of you who, if you've been trying to learn the markets, making money in the markets, however you're doing it, well, let me do it the other way. Let me start with this. If you're newer, there is only one way to make money in the market, and that's through technical analysis. I'm not going to discuss that with anybody. I mean, I will, but not right now. If you want to come to that, the seminar I do on Fridays, which is a ways away. The next one is going to be the second week of September because we just missed it. But the next intro class that I do, I discuss these topics. But there simply is no other way to make money for 99.9999% of the people. Only if you have several $100 million at your disposal, other than technical analysis. And there's no need to because it's great. So that is the way that people make money, the only way. And it's a great way. So understanding technical analysis, how, you tell me, for those of you that know and have done it, what education do you need to understand the math, the complexity of technical analysis? What do you need? Just technical analysis. What do you need? I mean, I'll average anything you guys say, but what do you think it is? And again, I'm not at all trying to be, I know it's tough for people, but I'm just trying to pinpoint the source of the problem. Yeah, but what I mean is what grade level, what academic level do you need to be at to be able to understand technical analysis at a level to make money? That's what I mean. Do you need a PhD, like a doctor or a lawyer? Yeah, and again, I'm not saying this at all to be demeaning. Please don't get me wrong. But to kind of, boil down the problem, to figure out if you're struggling, we need to know what the issues are, right? 5th grade? Well, yeah, I agree with you guys. I mean, it simply is not. I mean, if you fail in making money in the market or struggling, you can't say it's because you don't have the education, whatever. That's just not part of it. When I say you don't have to be a genius, what I'm saying is that if you just go logically about learning what you need to learn, eliminating mistakes, and figuring out that it's not a given. I mean, this is not simple. It's not common sense. The biggest problem I think a lot of people have is that understanding the market is not at all common sense. If you never believed me before, I've been saying this for as long as I've been speaking, and since I've done my own company at DTS 4 years ago. Hey, coming up on 4 years, guys. I've been very frank about it, very frank about talking about what it is that you need to do. You can read this slide if you want. What I'm going to do is go through the process of trying to explain this to you a little bit, what my point is here for tonight. I think it's a great point. I hope I get it across properly because there's a tough balancing act here that I have to do. I asked you in the comments there, in the email that you received, to see this video first if you could, a prior event called the Three-Legged Stool. Because I'm going to be talking about one of those legs here tonight, actually, a little bit. It's the math and probabilities one, so to speak. Here's what you need to understand charts and to be able to make money. You need what I call superior technical understanding. You need an understanding of psychology and/or, I don't know if I like the word experience, but confidence, seasoning, experience, several words you could put there. And then you need math and probabilities. I think that's a big part of it to some degree. Let me go to this next slide here. Math and probabilities. What does that mean exactly? Math and probabilities. Math and probabilities. The sayings that make sense for the math and probabilities part of understanding how to trade. And I don't mean the simplicity of, doing the math to figure your stop and the profit, all that stuff. That's obviously part of what you have to do. But I mean beyond that. I mean understanding the whole nature of what let me not say the word till we get there. Math and probabilities, some sayings that I say that are along the lines of the math and probabilities leg of the stool. I'd rather make money than be right. Some of you can maybe relate to that. Some of you think that's really a stupid saying. You have to be right to make money. Yeah, you don't have to be right to make money, and you don't have to be right all the time, and you also don't have to obsess about being right, and that's maybe the key line there. People obsess about being right rather than about making money. One of the things from tonight is I can actually go to a chart. I did it yesterday. I'm going to show you one where I kind of did it yesterday. I did it today. And say, if you made me bet, I think that stock's bullish. I think it's higher. But you know what? I'm going to short it right here. How can you do that if you're obsessed about being right? Because it's about making money. The other saying that one of my favorite ones is, it's almost kind of what I reduce my trading style down to. It's called a moment in time. One way to look at a moment in time, and again, that's hard to explain without a lot of in-depth understanding, but another way to look at a moment in time would be to say, if you looked at any move on any chart, take a long-term position. You find a stock that goes up 20% over 3 months or something. Great trade for you. Could you go back and find the moment, right down to a 5-minute chart where theoretically that stock gave birth to that move? I mean, that's the moment in time concept. To say, hey, I'm on a 5-minute chart. You can't trade a monthly chart from a 5-minute chart. But you know what? If you work backwards, you could find it. And if you happen to be on that 5-minute chart, at the moment you're looking around and saying, you know what? There's this avalanche here. If the 5-minute triggers, that's going to trigger that, that's going to trigger that. And you know what? This stock may never look back. Does that make sense to you, what I'm saying, when I phrase it that way? It's kind of like the birthplace of any move. And no, it's not really our job to find that. That's too hard to do. But every once in a while, you look around and you say, you know what? This could kind of be it. And we also don't have to find that to make money. I mean, you don't have to find the birthplace of a move to make money, because there's lots of places you can enter on it. But bring it down to a day trading position or something. On a day trading position, there's like one moment in time that day where, boom, that was it. And I don't mean looking backwards and looking at the chart. I mean, of course, whatever the low of the day was, theoretically, if you went long, that's not what I mean. I mean, using strategic technical analysis concepts and following them. What was the moment where a technical thing triggered that was a legitimate thing that you could follow every day that gave birth to a move that took you to the high of the day? You can find moments where good enough is, well, good enough. And this is where I squint a little bit, because the next couple slides are going to explain what I mean by that, because I'm almost talking out of both sides of my mouth, but I'm not. Because that may conflict in your mind to superior technical understanding. I think that's going higher, but I'm shorting it right there. These are all things that have to do with math and probabilities to me. It's actually a big part. I'd rather make money than be right. So tough to explain. Is superior technical analysis needed or not? I'm walking a thin line here because superior technical understanding is critical, but the three-legged stool implies that there's some balancing act, right? That was my savior then when I was trying to think how to explain this. Is that, yeah, you have to have superior technical analysis, but there is balancing there, and that's what I want to get to. And here's how I thought to explain it. You ready for this? Remember OJ? For those of you that are younger than 30 or something, I don't know, that was in the 90s, right? Was OJ guilty or innocent? Was OJ, this is a non-political, we can talk, it's 30 years ago, we can talk about this. Was OJ 25, whatever. Was OJ guilty or innocent? Now, for those of you that don't know, this is O.J. Simpson trial, and if you weren't old enough to be TV bound, I guess, well, what? As long as you're 35, I guess you would have known about this. But it was on TV 24/7. It was just like, that's all there was in the world. It was just on day after day after day after day after day. We're watching every little minutia of the trial. America was fixated on it. But here's a question for you. It was such a popular thing. Was he guilty or innocent? All right? I mean, everybody knows the O.J. Simpson trial, right? If it does not fit, you must acquit and all that good stuff. And yeah, you see, a lot of people get out of it that he was not. I'm not getting into. I mean, what did the court say he was? I'm not getting into what do you think he was. That's not my point. Should have clarified that. I don't mean that. I mean, what was the legal decision about OJ being guilty or innocent? Well, the legal decision was both, and that's my point here. OJ was found innocent in the criminal trial, but he was found guilty in civil trials. That wasn't as popular, that wasn't as, as well known, but whoever, Nicole, right, family sued, and he had to pay money civilly. So how can that be? How can you be guilty and innocent? It's not because of a retrial. You can't retry somebody. It's because it's a different trial. It's because I don't want to get all legal here, but it's a very simple concept. If you watch TV, anything, you know this. In a criminal trial, you have to be guilty beyond. It's not research and development. That's a reasonable doubt. That's a high standard. It's not terribly defined, but people say like 80% or something. In other words, you have to be really sure. Civil trial, it's called preponderance. It means 51%. If you're more guilty than not, you're done, right? So here's my key question to you, which somehow, in my mind, gets back to trading. Why the big difference? Why the big difference? The difference in civil and criminal is actually huge. I mean, OJ, innocent? In civil, he was dead guilty. I mean, he was just like, toast, instantly, instant toast. Criminal trial, didn't get convicted. Why is there such a big difference in standards? Why can you easily have to fork? And civil trial means, in case you're unfamiliar, it means it's when one person sues another person. So you pay money. You don't go to jail. Criminal means it's a state versus you go to jail. Civil means person versus person. You pay the person money or whatever, right? Yeah, so why do we have such a big difference? I mean, it's a huge difference in what has to happen. Well, because here it is. You ready? Here's where it all ties together. Because the chance of going to jail improperly is a much higher risk to society than someone paying money improperly. Okay? Now, when I did all this in my head, this made a lot of sense to me. So here's the thing, and I think it does make sense to me. Please, input would be loved here. On a chart, we need superior technical understanding, but here's what a lot of people don't get. The superior technical best trader in the world, pretend it's me for a minute on charts. I don't have 100% certainty on anything. Not even close. Not even close. Does that scare some of you? Because that could be your biggest problem for a lot of people. That could be the biggest problem, is that you demand certainty. And since you can't read it on a chart, because actually nobody could read certainty on a chart, you look to it in other places that are way less certain than a chart, like news and earnings and garbage like that makes absolutely no difference about where the price is going. So this is the point that I'm getting to on the first part here is, and by the way, we're coming to all kinds of charts here. This turned out to be kind of neat, and it may be kind of theoretical, but I'm going to go through some charts and rate these in terms of how I thought about it. I've never actually done this before, and I didn't really pull this together until I decided to do this presentation. And then once I decided to do it, I had my foot in the door. I had to then back it up with actual facts and stuff. And when I did it, I think I learned something myself. It was kind of interesting. So having 100% certainty would be nice, but we never have that on a chart. And sorry to all you architects and engineers. This is why I sense the frustration sometimes with people who are perfectionists and architects and engineers that, they want everything to the percentage and they want formulas. And you can only take that so far. Technical analysis is objective to a degree, but as you saw in a presentation I did sometime in the last month, even the objective technical analysis isn't necessarily so objective, because I proved that I could get all of you listening to me to split right down the middle whether a particular bar was bullish or bearish. So there is a lot of subjectivity there. And when I teach, I do not ever invoke hard number rules. When we talk about climactic type volume, higher than average volume, a wide range bar definition, it's not pull out your charting tool and take the average size from the last 300 and multiply it times 3. That I never teach anybody to do that. I say, look at the chart. Have you seen a bar like that on the chart anywhere? Okay, that's a big bar. That's what we have to do. Because it gets ridiculous to try and pinpoint stuff like that, because we're making our decision on a whole lot of different things, not any one thing. It's never a case that one thing happens and we decide to go long or short. here's a little bit of thinking down that line. One of the things I want to get to a little bit that starts to enforce the fact that, yeah, you have to be great with charts, but that has a limited role. What if you had a chart you weren't that thrilled about? Or let's transfer that to something that we can put hard numbers on. Yes or no? Would you pick one number on a pair of dice and bet somebody $10 that you could get it right? For $10 wager, $10 win, nobody would do that, right? You have a 1 in 12 shot. But what if you won $200 instead of 10? What if you won $200 instead of 10? Question, would you sit there with somebody, rolling dice, you pick one number, and would you do that? If you could do it all week long, would you do that? Yes or no? If you got paid $200 for the win and you had to pay 10 for the loss. Yeah, you would be an idiot not to do that, right? You could quit everything you're doing and just go play dice with this guy until he ran out of money, right? So I want you to start thinking that way when I'm getting into this conversation about, yeah, charts are the paramount of importance thing, but yet sometimes we have to say, okay, the chart's good enough, now let's look at some other stuff. And it's more than just risk reward. The term that is kind of called is expectancy. And there's a lot of information about this if you like this topic, both in that other presentation that I said you should watch called The Three-Legged Stool, and also in a book that's on my website under the other stuff page, not free stuff, but the other stuff page by Van Tharp called Trading Your Way to Financial Freedom. It's there because that to me is the #1 book I think you should read if you want to read a book. There's other good books out there in psychology. I actually have 2 books out there. I don't even recommend you read them. But Van Tharp's book is the #1 book. It talks about some of this stuff. And I think it's, at some point, it's the most important topic that you will have. Let's look at some trades. Now, whenever I do a presentation, you guys have heard me say this for years, I always go back and look at the recent trades, last couple, 3 days. If it's a weird thing I'm looking for, I might have to go back to last week. But, I'm never, and sometimes, if I don't have a good couple of days, I'm got to scratch a little bit and say, boy, it was a tough couple of days. And sometimes I get lucky and have some good days. And I typically like to do this presentation, the night before, so I'm not scratching around. And sometimes if I needed something, I may add something from today. So yesterday was a really nice day. It's not every day is that good. But the great thing about it was, as I went through those trades, I'm looking at them, and I was like, wow, this actually is going to make my point I wanted to make about looking at what went into each trade, and because they all were different. And I didn't even realize that until I decided to do what I was going to do late last night. So it's not, obviously I didn't take trades trying to make some point tonight. They're just the trades, and then afterwards, here we go, and they just happen to work out perfectly to make the point. So there were 5 trades yesterday, and they all happen to be the first half hour of the day, basically. And I want to run through and kind of go through each one. And again, this is not a technical class per se. I'll show you the technical concepts I was looking at, but I want to take a look at all the aspects of the trade, sort of, to some degree, anyhow. So the first one there is MRO. MRO is right out of the open, almost an immediate type entry. Now, MRO, when I scan and I send a watch list to people the night before, typically, or sometimes early in the morning, and I start getting ready, typically around 8 o'clock or something, and looking at gap lists and everything and pulling things together so I can get ready to talk to the room at 8:30. Well, sometimes there's just a stock that just kind of glows to me, just kind of sticks out. It's kind of like I kind of remember it that night when I send the list out. I kind of, as I start going through in the morning, I go, oh yeah, there's that one. That was MRO, right? And there's several people who I'm sure they're in the room with me, right? Guys, yesterday, MRO, well, obviously it was the first trade I did. MRO, I said I had a warm, fuzzy feeling about MRO. I just liked it, right? Thanks, Ricardo. And here's something interesting. Here's the chart of MRO. This is a 60-minute chart before yesterday, before the trading day. Just look at that 60-minute chart for a minute. Would you consider that bullish or bearish? Am I going to do a long or a short here? If you're in the room, don't blow the answer for everybody, but would you consider that bullish or bearish? Look at the chart. 60-minute chart right up here. You can see me pointing, right? There you go. 60-minute chart. That's before the trade. So the next bar will be the next day where I'll be trading it. What do you guys think? Bullish, bearish? Give me some feedback. What do you think? Your technical skills. What do you think about this chart? Is it bullish or bearish? What do you see on here that would make you say, yeah, I'm a little bullish, I'm a little bearish, don't like this, don't like that? Frank says long. Depends on where it's open. Okay. Well, obviously when I scan, keep in mind, I don't know where it's going to open. So so obviously this was a favorite to me even before I knew where it was going to open. Now this is the thing about watch lists, right? You do the watch list in a neutral environment the night before, and then watch lists aren't necessarily trades, right? A watch list needs some other things. All of a sudden we have the market to consider. We have where the stock's going to open. And you have to look at all this stuff together to decide if it's going to be a favorite. And yes, the opening for this did complement what I wanted to do. But point being, this was a favorite chart of mine before I even saw it, right? So I kind of call this a sleeper chart, meaning that I don't think the average person would even see this as being bullish, because you could argue you're underneath two prior highs, right? You're underneath two prior highs. We're not even in an uptrend by that comment, right? So something wrong there. Well, it's not. You're missing the point of the chart if that's how you're looking at this. This was a wide blast-off bar that happened, clearing the whole daily range. And because that wide bar, it took 2 days to digest. And then on this gap down, this is the question asked and answered. This is a big deal to me. Here we gap down, and if the bulls were going to take this back down to the low of this daily area, they would have, but they snapped it right back up and held here. So to me, that's very bullish. And when you look at it properly, there's no resistance here. Now, I say no, I mean, there's support and resistance everywhere in the chart to some degree, but there is nothing here that I would call resistance or nothing that I would consider to be a problem. Not everybody looks at it that way. So this to me was a very, very bullish setup, and I think this is one of those things where superior technical understanding was the real key. So anyway, so what happens here? So the stock happened to be opening up just a little bit above that consolidation. The bottom chart is the 5-minute chart going into that day. So it did just perfect. It was a favorite chart, and then it did just what I wanted it to do. And I got in there over 1201, stop under 1180. I don't think, see, I did a lot of work on this the last minute here. I don't think many would have seen this as bullish. That little moment in time on the entry, no psychology, ran like a rookie. So here's the stools, and this is something, I don't know if this makes sense to do this or not. I may cause more questions and controversy than this is worth, but in my view then, this trade revolved around superior technical understanding. Does that make sense to you guys? Because I don't think you guys, most of you are smart, but the average person wouldn't even looked at this and thought bullish, because the simple rules of technical analysis most people live by or learn are not enough to make money. They're just stupid rules. People look to the left. Well, okay, look to the left, so what? That means I can only trade new all-time highs or new all-time lows. So I think this was a chart that needed somebody that understood the chart. And in addition to that, there was a little moment in time concept here to me. In other words, if this would have failed, okay, but if it works, this is the birth of a big move possibly, and it turned out it was a pretty good move, okay? Now, psychology experience, really none of that came into this for me, because on one hand, when you have great confidence in technical understanding, that takes away the need to have psychological issues, or to have psychological issues, not the need to. And the other issue is that psychology comes in a lot when you're trying to get to targets. And it says here, I took and ran like a rookie. See, I had, obviously it was kind of a busy morning for me, and I like what was going on. And I usually try and pick a stock that's going to be kind of my home run hold. You know what I mean? Where I'm going to say, okay, you know what, I think this could run all day. And this could have been that stock, but I decided for whatever reason I was going to, I know what reason it was. It was because the day before a little bit, and a couple days last week, I was too piggy with targets. I look back and evaluate, and I got to a nice first target with a third, and then the rest of the 2/3 disappeared. Some even turned into losses. So I thought, okay, whatever it is right now, we're in a tight range, we're in limited moves, I'm not looking at the right stuff, so I decided to just cut my targets back. And I had a day last week where I lost money, and I would have made 2.5 times the day goal if I would have taken all 1-hour targets. Now, obviously, you don't change your trading style to accommodate one day, because you might lose the next 50 days in a row, but you do take note. And that's why I just took one stock and said, let's start the day right. Let's book some profit. Boom, boom, boom. So I didn't there's no psychology. This is the easiest psychological trade ever because I had great confidence, it opened the right spot, and I took cheap targets, so to speak, right? It wasn't any big deal. Yeah, I was out of this by 10:20, so I didn't hang long. 10:20 somewhere in there. So, I got a good chunk of the move, but I didn't get the whole thing. So there's our ratings down there. Superior technical understanding. No surprise. Okay. Next trade was Fox A, Foxa, 60, 15-minute chart. Now this one here probably more people would look at this and kind of get this, right? All kinds of simple technical concepts here. A wide range bar, cleared some prior highs, nice little pullback, then we consolidate out, right? Looks like a piece of cake. This was one of the faves on my list too. But here's the problem with this one, guys. Look what happened when it opened. I left the first couple of bars of the day that I traded. Look what happened when it opened. It went flying lower. So what do we do about that? We have a nice bullish chart that apparently is just falling apart at the open. What should we do? Go short? Go long in the middle of the free fall? Or wait till it goes over the highs? I'm going to let you guys vote here. Hang on. A, short. B, long on the free fall, meaning right there where you see it, or C, long when over high. What do you want to do with this one? Short it, just jump in long, almost kind of blind, or let it clear, today's high, yesterday's area, whatever. Wait for, actually that topping tail goes up over that prior day, so. Well, Trees, that's always a good answer, but then my next question is, on this particular trade, what should or would your trading plan tell you to do? Well, Brian, I don't have to extend my, you mean when I get in, extend my stop down, okay. Well, shorting it is the wrong answer because this is a bullish setup. You don't flip your bias because of the early morning, and for those of you who said C, that's a common answer. You want to wait to see that. And here's where I guess a little bit of quote unquote superior technical understanding comes in because I go long right off the bottom. One of the styles I teach, one of the entries I teach allows you to do that, and actually going long off the bottom actually would produce less stop outs than any other thing you would ever do. So I did go long off the bottom there. And naturally you could wait for the top, but if you take a look at the math on that, here's what I want you to think about. Waiting to come over the top here, getting in at 36.70 instead of 36.24 or 35. I was already up a full day's profit when you'd be getting in. So that doesn't mean it's always the right thing, right? But you have to ask yourself, what was the risk of getting in when I did? And that reverts back to the question then, well, how confident are you that would hold there? And it comes down, just a long discussion about the actual technical concepts here. But again, the point I'm trying to get across here is that this one here was kind of split across the board for me. It's kind of like, well, it didn't take any great superior. And when I'm rating this here, I'm not rating the technical understanding. I'm rating the superior technical understanding. So sure, it took great technical, but anybody could look at that chart and say it's bullish, right? Anybody out of technical analysis school 101 would say bullish. But the question then becomes, how much superior technology did you need? All you did was just to understand that entry was bullish. There's a thing called the 935 reversal time, which I think some of you are aware of because of a recent presentation I just did. And that's part and parcel with that. That's what happens all the time, right? I don't look at green bars. Actually, Mark, I was in, see that second 5-minute bar? I was in that bar there, just as it started to form a tail. So it went a little lower after I got in, and then it shot higher. Math and probabilities, also an equal part in this one to me, because you have to start doing that balancing act, right? Between what is the overall, ready for it, expectancy, between taking a trade down here and waiting for up here. Because it's not just a matter of, who's right, who's wrong, who stopped out more. The question is, how much money do you make at the end of 20 of these trades? Does that make sense what I just said, everybody? This is where, see, I'm trying to use all these terms I introduced to you in the opening stuff. It's not about being right or wrong. It's about, hey, who made more money after 20 trades, right? So, Mark, I'll just use you. You could come in here. If I stopped out of this and it fell for 3 days, right? If it fell for 3 days, you could laugh at me, tell me I was wrong. Ha ha ha! What an idiot you are. You got in a trade that you were long and it fell for 3 days. But you know what? I lost the same amount of money I would have lost if I took the best trade in the world that stopped, right? But the question is, well, if I do that trade 9 more times, how much money do I make compared to you, right? And that's part of this whole thing I'm getting to, where, you know what started this whole presentation tonight in my head? The whole title, You Don't Have to Be a Genius. It's a common comment I get, and I'm surprised I didn't put it on the slides. I meant to put it on an introductory slide. I forgot all about it, so it just popped in my head right now. You know what I get people saying to me a lot when they're thinking about learning? And I didn't realize, it wasn't until maybe 2 years ago. I never heard this before. And I was actually talking to them on the phone. They said, you know what? I'm nervous because I'll never understand charts as well as you do. They were just amazed with how well I could read a chart. And they're saying, I'll never, ever understand it as well as you do. And it struck me for a minute. I was like, wow, yeah, people probably think, they hear me talking, and showing off this stuff, blah, 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 whatever, and they think, wow, on one hand, great, they think I'm good at this, but on the other hand, they're thinking, I'll never be that good, so I can't make money. And that's completely wrong. It's completely wrong. Because you don't have to be as good as I am at reading every spot of a chart. You have to be pretty good at everything, and you can learn that fairly simple. And then you got to get really good at what you want to do, specialized, right? And I can't say that more emphatically enough. I mean, I am just so thrilled and proud. I like training traders. I just love doing it. And something I'm very proud of. I enjoy doing this. And I say it again, my favorite students are the ones that have never been involved in the market before. But there's just several of them. I don't hear from some people sometimes. Some I do hear from. And I am, just thrilled about the ones that come along and just had no understanding of charts whatsoever. And they just become really good at what they want to do, and they're making money and they do great. How do you calculate? Where did I put the stop? I put the stop at 0.00, I believe it was. It was in at 30, over 36, 35, stop under 36. I think it says it right on the slide. It says it right on the slide here, guys. Right up there. So let's go. So this one here, I kind of rated equally across the board. It also took some psychology because I hung on to this pretty stubbornly. And I took half of it until 11 o'clock. So that was that first pop. It was a great exit, actually, right there. And the other half I took till close. Let me talk about that in a minute. How in the world did I get that to close? How did I get that all the way to the close? It turned out it closed a few cents higher than where I took my first target, but it had the chance to run a lot higher, right? Yeah, exactly. In that case, Glenn, you're right. I mean, it's hard for me to sit there and to try and manage an intraday trade because, this thing originated off the hourly/daily chart. There's no reason to be fretting with it, but yet that's what people tend to do, and that's what I will tend to do sometimes when I'm sitting there. So I like to, you people in the room know, you'll hear me say, leave me alone, it's time for the walkaway, right? I try and get set for what I call the walkaway. Have some money in the bank, have stops in the right spot, have a target or two set, and be green when I walk away and hope I come back to a big green day, or maybe I give some back. That's what I always try and do, right? I almost did, Glenn. It was on my screen. I mentioned it. I didn't do it again today. Yeah, didn't do it again today. All right, let's go to the next one real quick because we're running out of time. I'm having fun. I hope you guys are having fun. G-Pro, long over 1094, stop under 1080. What are my comments on G-Pro? Well, there is and see, you notice every one of these is going to be kind of a different concept in terms. I'm just going to show you this one here. I don't have any big questions on it. Entry over 1095, and this is about the first 10 minutes of the day, and then stop under 1080. Questionable the way it looks on the hourly. It was the daily 180 that made this one work. So it's hard to find the entry. The 5 was a moment in time. So here, look at the flip around in my mind on this one. Superior technical understanding, 10%, like almost nothing. Now again, of course there's technical understanding. I hope you understand the difference I'm trying to make there. It's maybe only in my head, but obviously somebody who doesn't know charts couldn't do this. But all I'm saying is the understanding needed to see this chart, to understand it, to react to it, to say, oh, that's bullish. I mean, anybody could have done that, right? Just out of technical analysis class 101, you could have done that. So that was no genius to say, wow, here's a chart that's potentially bullish. The daily chart, yeah, I'm not putting all the charts up here. You can look in your own charts if you want. This is G-Pro, but the daily, you can tell, it gapped up all red then all green. It was a bull 180. It was a complete reversal. So it was in general a bullish concept. The problem is a day trade. How do you sneak into this? And that was my problem, sort of. And that's where the moment in time thing came in. This was a moment in time entry for me. Took the entry here on what you would call a 5-minute buy setup that really was the support level from the whole prior day. Now, here's where everything I'm talking about today comes in. That's why I ended up loving these trades from yesterday, because they're all making the points I want to make to one degree or another. So here, to me, there's the great understanding of charts, wasn't it? Here it was that moment in time concept where this hourly chart, where am I? Yesterday, this could have easily done this, right, and still been bullish. Could have gone all the way back down. There's no guarantees. So the entry was not very clear to me. What it ended up being was it held the support level from all day the prior day, and what really happened though was here, got to come back with maybe a little circular argument while I'm saying there wasn't great technical understanding needed to find this. Maybe it wasn't convincing me to go long, because see that bottoming tail down to there? What does that tell me, everybody? I did not go long down there on this one. I went long over the top here, very specifically. Every chart gives me a different impression of how I want to enter it, and that's why entries to me are separate concepts from strategies. There's no such thing as a strategy that has an entry. There's an entry which gives you a picture of power, a reason you want to be long or short, and then you finesse your entry based on different concepts. Right, Eric, exactly. Exactly. Remember I said maybe this hourly chart would have done this? Well, you know what? No guarantee, but if it was going to, it probably would have followed through right there. But instead, immediately the bulls come back and snap that back up. And again, it was probably just part of that 935 reversal time, right? One little trick the market makers get to do is they stack up those orders, got 20 buys and 20 sells, and they go sell, 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 sell. And then they come in and buy some shares themselves and go buy, 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 buy. And then the rest of the chart was bullish, so it just kind of took off. And what else did I have to say about that? I think it's about it. I was going to hold this, but look what it did. It just flew. And this is what I call the free money. So I took a target on G-Pro at 10 o'clock reversal time when it flew higher. And I thought, okay, hold the rest of the day, and look what it did after that. So I took it all. It just was done. And it turned out to be a smart thing to do, because I think my second exit was higher than it closed, I think, yeah. So did a good job with that. Don't always do a good job with them, but I did a good job with that one. So here's another one, totally different concept today. Now this SDC was a big gap down. See that gray line? That's where it's going to open. And there's no point in, I'll just show you the charts because there's nothing you can deduce or ask questions about since you can't see anything. But here's what happened with that. It opened and fell lower pretty immediately. Now, one thing you have to decide on gaps, of course, is how you're going to enter. The way I teach gaps is the one spot in technical analysis where I use kind of a point system and then we assign an entry to it. And this did not justify jumping in kind of immediately. So I did not get that early entry. I didn't try to get it. It wasn't even on the table or being watched first thing. So if you would have done that, and in your own technical realm, again, like I said, you don't have to know everything I know, but you have to get really good at a couple things. And maybe this is something you know. And one of the reasons that I even considered this, because it wasn't a great gap, one of the reasons I consider it was, again, looking around, understanding what's been happening in the market, watching charts. Gap downs have been working well. You know, it's a bullish market and momentum market, but when something gets hit, people are just getting out. So the bearish gaps, I think, are working better than average. So I was tempted to do it. I wanted to do it. I did do it, but I didn't take that immediate entry on it. Turns out that was the only good entry on it. So what I did here was I ended up jumping in at about 10 minutes till 10. And I took it on that little pop when the pop started to roll over. So just in that red bar somewhere. And so it was under 495, I think was the number. No, under 499. And I threw my stop up to 520, which is just kind of randomly up here somewhere, about halfway up that chart. Well, what does it say here? It says a big gap makes a wide entry, did not take great technical skill. I gave this 0 superior technical understanding. 0. Why? Okay, it's a big gap down, the whole world knows it. I didn't feel I had any edge on anyone to say when to short that, how to short that. Didn't even try to short it, wasn't going to short it. But when I got this little pop, what happened was the math and probabilities thing took over for me. So what I decided to do was to get in really tight when it started to roll over, throw my stop up about halfway, assuming that if I was going to hold it, and actually it would have held, I think. Well, yeah, I probably would have stayed with it if I did stay with it. But what I decided to do was once I got pretty good ready, you see down at the bottom of that tail, it felt pretty good initially. It's a compressed chart. And at that point, I decided, you know what? That if it is going lower, it is going lower now. Now, maybe this goes back to say, even though I said it took no superior technical understanding to find the chart, to decide to trade it, but maybe the entry I took did take some superior technical understanding, because what I knew was that if this comes back over the red bar, it ain't going anywhere, right? So I got my stop down tight to right there, and I ended up taking a 1/4 loss on this. This is the only loss today, and it turned out to be a 1/4 loss. Now, I don't typically try to do that, but this was kind of set up this way intentionally. So it was using math and probabilities to compensate for my lack of knowledge on the chart. Boy, was that a great catch line. I just set out of nowhere to tie this together. So I used math and probabilities to compensate for my lack of understanding of the chart. Did that make sense? Now, there's another choice I could have had too. What was that? What was the other choice I had? Since I had, exactly, just could have said, heck, you know what? I'm not really on top of this chart. I don't feel I have a big edge. I could just stay away. That was my initial gut. And then the little tickler for me was the fact that, hey, here's my little edge. Gap downs have been falling. Gap downs have been falling, right? Because I've had some really good ones, some big, and I've missed some too that I decided not to do. What was the CAH from last week? I put in 3 times the biggest bar it's ever seen. I didn't get all that either, but we've been seeing a lot of good moves on gap down. So I went after it, and no real harm done. And it took no psychology, because I was just kind of in and out of it on a plan thing. And then I was done, kind of, and I was cleaning up and, gonna get ready for the walkaway, as I call it. Gonna be done at 10 o'clock or so. And as I'm cleaning up my charts, guess what I see? I see Apple. Now, I wasn't looking at Apple all day, and here's why. I put Apple, this is what it looked like before the day of the trade. And I do this sometimes. I do this a lot. I put Apple on the chart in case it were to rally all the way back up to there. Do you believe me? Wait, Paul, you took a chart and you put it on your screen with the hopes that it would run all the way back up to the high from 2 days ago. Do you believe me? Yeah. People in the room, isn't that what I did, right? We weren't staring at Apple, wasn't trying to short early. I do this with a lot. I put it on specials, I very organized on my screen, and I have reward charts where I say, okay, I may not remember the exact setup in all these, but I know I want that to rally a lot to short it. The best way to short, folks, is to short rallies into resistance, not breakdowns. Breakdowns are a very tough way to make your living. Short rallies into resistance, that's what works better. So I thought the Apple chart, now I had Apple in my mind for a couple of days, just kind of a back burner concept. And yes, I do consider this technical analysis. Apple did earnings a few days ago, right? I don't know what exactly they said. Didn't read anything. I never would. But I heard somebody say on a news station that Apple had fantastic earnings, blew everything away, and yet the stock refused to go higher the next day. Now, to me, that is technical analysis. I'm not reading an earnings report. I'm just reacting to the fact that great news became neutral news, right? And for the next 2 days, it couldn't go anywhere. So I felt this was just a really great resistance area. Just forget that on the back burner. I felt this was a great resistance area, just kind of a sideways chart on a chart that is already making lower highs on the daily, relative weakness to the market. So I figured, hey, if it gets dragged up to that line again, so I look at my chart, and that's what I see. I see, hey, Apple's right where people in the room, Who was in the room? Who was in the room when I was still on the mic when I said Apple? Just want you to verify this. Who's on the room? Ricardo, right? I was like all of a sudden, right? Hey, Apple, right? I was just like, hey, I wasn't following it. It was just on a chart, and all of a sudden, hey, there's a chart I want to rally, and it rallied, right? Just boom, there it is. And it wasn't right. It wasn't a minute later I found the entry numbers because I did not wait for it to go under this bar. I shorted it in the middle of that green bar using a different concept because I didn't need to see it go under anything. That wasn't the strategy. So Apple, you see the numbers there? Apple short under $4.99. I waited for Apple to get all the way to $4.99. It took about 7 years, but no. Obviously, I didn't put the right numbers on there. You saw it on the first slide there, but the Apple numbers were, it was back on the first slide, but Apple numbers were under 147.32, stop over 147.90. And that was just after 10 o'clock. Can you see those numbers? Yeah, you can see. And that's right in the middle of that bar. And then, yeah. And then, so what did I have to say about Apple then? Entry, boom, boom, boom. Having this on the watch list was the big deal. So I rated this hugely high in terms of superior technical understanding. To put that chart on the screen the day before and say, hey, this thing rallies up to 147.50, I want to short it, and there it is. Math and probability is kind of a zero on this. This is just a technical, nothing special. This is just a big major resistance cell setup. Used a cute little entry, but just basically just pure charts 101. I felt I really had a handle that area was going to hold. And then the big target. How did I get such big targets? Well, I can, for a day trade, that's a big target. I walked away. I wasn't at the screen when targets 1 and 2 hit. And then target 3, I set up a trail and ended up taking it all the way into the close. So Apple, fun stuff. I don't trade Apple a lot. You know why I don't trade Apple a lot? Anybody know? I know some people live off Apple. Why don't I trade? Yeah, well, right. Because it just mimics the cues. It's just doing what the market is. See, I'm always trying to catch an edge. And that's why even though I like trading futures, occasionally do, I think and I know some of you trade futures. Glenn trades futures, right? Futures all the time. But what I do tell people is, do futures, that's great, but I don't have the patience to just do futures because it's one thing. So one of the edges to try and get is what I said about Apple, it was starting to show relative weakness over the last 3 days, right? Yeah, Glenn's great at futures. But I like to pick up that extra edge to say, you know what? Here's what's going on. Here's a dozen stocks that are doing different things, and Apple had that little bit of relative weakness, and that's why I normally don't do it because it doesn't show that. Actually, I never traded it, right, guys? But I was looking at Apple long a couple weeks ago because it was showing relative strength the other way around. I never ended up doing it. This was an unusual event, I think, in some ways. Did you guys like this? And do you have any questions? Because that's all the slides I have. The slide up here is just simply reminding you, and I threw it up here early because some people probably take off, but if you want to day trade and don't have capital, you can email me, and there's a way that you can do that, and I would not suggest it to you if it was not what I consider to be super safe and a good idea. If you do need the capital to day trade, email me if you want. Awesome. This will be posted like all the Wednesday and Saturday coffee events. They get posted. I always say by the weekend. The last one I had up early. Typically by the weekend they're posted, and they're posted both on the DTS free stuff page, which I suggest you check out if you've not, and they're also posted on YouTube. It's the same videos. It's kind of just mirror image of each other, just where you like watching them. There's advantages and disadvantages of both. YouTube, of course, you will get a bunch of videos queued up for you, some from DTS, some not. You may enjoy that. That's great. If you just want to kind of focus from DTS, the free stuff page allows you to view the videos on the page, and then you can just go to the next DTS free stuff thing. All right, guys, comments, questions? I get a lot of comments that you feel some of these topics are fantastic. I mean, obviously, I'm not here teaching. That's what I do have class for. It's the one thing I do teach in class for those of you that become students of the seminar program is the actual nuts and bolts of technical analysis, what you need to do to make money. But these Wednesday events, they're all required viewing for seminar students because it's all good information. It's just that, and they're also, like I explained, if you want to try to learn it on your own, feel free. I tried myself as well, and these will all be very helpful to you as well. I found that gaps are not usually follow the market. Is that normal? No, LOL. Oh, hey, how you doing? Well, a tier 1 or tier 2 gap, meaning a shock value type gap, by definition won't be following the market because it goes what we call on its own page. I could go, if you come to that Friday Introduction to Mastering Technical Analysis class next time I do it, which is like the second week in September now, I go into that in a little more detail, explain it a little bit, but they're on their own page because there's big stuff going on. If a stock is consolidated in a $10 and a $5 range for months and it gaps $5 above that range, there's stuff, everybody in that, see, that's how we get, Lowell, that's how we get our edge in technical analysis. It's either from following trends or from recognizing shock value. That's what gaps have, is shock value. When we're doing gaps, we're able to look at a chart in some cases and say, it's not just a matter of who wants to be long or who wants to be short, but in gaps, it's sometimes people have to buy the stock or have to sell the stock. And not just individuals, but funds as well. So if you can recognize that, that gives you a huge edge. Shows that finding the right entry is important. Joe, are you like just setting me up for my tagline? I'd rather have a great entry on a so-so strategy than a so-so entry on a great strategy. The entry is everything. The entry is everything. Prop trading account, boom, boom, boom. See the three-legged stool. If you're new and you're blown away by all the stuff on the free stuff page, there's a section called the Hall of Fame. Check out the Hall of Fame. They're voted on by DTS members. They really were. Some of you probably voted on them. What they felt were the best videos to start off watching. And you can watch them all. There's actually kind of almost sort of no repeats on there, believe it or not. Remember also that if you're at the free stuff page, there's an archive at the top. There are only a handful on the actual DTS page. Most of them at this point are on the archive page. If you're at new highs, you have to either make an estimate on the target area based on prior typical moves the stock makes on surges, and or set up a trail stopping type method. And that trail stopping method is going to depend on how close you think you are to your final target. So you got to pick a method. I like to use pivots, and you can use them on the daily chart, weekly chart, or hourly chart, depending upon how close you are to taking profits. Because I don't know if this is something you held for 2 days or for 2 years. If you want to send me some information about it by email, I can give you some comments if you like. Don't send charts, please. Just send me the ticker and what you're doing, okay? All right, guys. That should do it for tonight. Have a great one. And we'll see you guys whenever I see you. I don't even know what's next. I'll see you when I see you next. Check out the DTS calendar. When you're at the free stuff page, there's a calendar off to the left. Check it out. See you guys.